Good morning, good evening, good day to you. Salam alaikum, marhaba, guten tag, здравствуйте. This is Mario, Forex other way. Guys, I'd like to share with you today some of my tricks related to market harmonics based on geometry and numbers. So it's very useful. I think it's worth trying in your trading arsenal. So let's start the rock and roll. W.D. Gunn considered some of the numbers of very high importance. Some of them basically number 2, 3, 5, 7, 10, 12, 21, 36, 27, 153, 52, and so on. So it's plenty of them, and that is known that he used numerology, but I'm not going to talk about numerology today. I'm going to tell you, just want to share you with some tricks related to numbers, to simple tools, how you can use numbers to improve your trading. So let's start straight away. I stop talking that much bullshit and let's go. I got Fibonacci retracement over here. I just settle it. Its settings is from 0 to, as far as I remember, to 12. So we drag something like that. Look, I show you the settings. What the settings are, I will show you right now. So we got 0, 1, 2, 3, 4, 5, 6, 7, 8, up to 12. What is this 0? I just get rid of it. And so is the settings. So it's divided into the numbers. From this one to this one is 1, after we got 2, 3, and so on. What is important? Why I've drawn that way? Because this is when you... Oh, it's just the end. We are on 1 hour chart USD Swissy franc, and this is the first leg, first impulse of this small downtrend on 1 hour chart. What is important in this? The impulse doubled, the marker returned, it made 50% retracement, then broke the line and went further, hit the line number 3 and went further. At the line number 4 it's found strong support and couldn't get through this way and came back and again hit another line which was resistance. After it was broken, it has become resistance. Then was ranging around the resistance and so on and started going further. Let's make it longer. I show you what happens, how those lines are really nice. Look over here, how they are respected, some of them. Line number 3. So remember, we started here. So here the market broke through, and slowly I get it through. Look, the market broke the line 3, but couldn't get through. We are on 1 hour, so on 4 hour it will be much smaller. And then it has become very strong resistance. You can see this over here. What happened further? Further, the price went through the line number 5. So this one, this level is 5 times bigger than the first impulse. Obviously, the market came back. Line number 4, you see, it's again resistance. You can see on this week over here, if you know anything about the candles, 50% retracement, boom, next level, 3. Look further, what's happening. The market was here, it was support. The market tried to get to this level again. Got it, it's strong resistance. Then market came back, went through this support. After ranging around it, went to the line 5, broke line number 5 was support, and number 6 is another support area. It went through number 7. Look, number 7 again resistance. The market found support at number 9, which is, I repeat, 9 times the first impulse. Came back to 7. And so on. Again, number 9, strong impulse. And let's have a butchers. What's happening here? And market came back, starting another cycle. So what's happening here, and still those lines, they still are valid, you see. We are on level number 12 from the very beginning. So 12 times first impulse, 12 times this one. So it goes one first leg, first impulse, then we got second, third, fourth, and fifth, on number 5 it stopped. Well, but it's not the end. Let me just show you another one. Another one is this one. Let me show you what I try to do to show you here. I will show you. It's another method how you can use these Fibonacci retracements. First leg, first impulse, or first candle of the impulse. If we know it started here and we don't know where it's going to stop, we can also drag the line over here on the first candle. And what you see here, that the market stopped 5 times the value of the first candle. Over here, found strong resistance. Here again. So we are not talking about first impulse, this one, because first leg should be, well, basically from very bottom here, it should be the first leg. From here, from this bottom to this top, it is the first impulse. So what we are trying to get, so the second leg, so times 2, it will be already here. And the market came back, whatever. But this one is more precise, first impulse. You can also try first candle and multiply this value usually by 10 or by 12 when you get the level that's the first candle or first 2 candles. You can see more or less where the market should get. First candle, this green one, this small babe here. And look, exactly 12 times the value of this candle, the market met the resistance between 12 and 10. What I'll show you will be in another time, maybe this time or another time. Important also are, the most important are number 2, number 5, then 10, 15, 20, because we use decimal system of counting that usually first impulse, first leg like this one, this first impulse, usually in long term, especially for the shares market, it's multiplied by 2, 5. Important points, turning points are 2 times the first leg, 5 times 10, 15, 20, 30, 60, and all between them. You might check it on Bitcoin, for example. When you check it on Bitcoin and first impulse very low somewhere, Bitcoin with $1 or $2 or $5, it happened. It multiplied 20, 50, 200 times, but you will see when the market was turning. Let's try another one. Let's try this one. So let's make the first candle or first leg. If we say it started here from the lowest point and only, oh, it's not this one, we are not sidereal and synodic here. If we start from this pin over here, you will see where the market finds support levels for this one. It's not that probably better would work with another one, but like this one does is show something. First leg. Let's do it first leg, starting from where is first impulse. This candle is the first, very first impulse of growth. So as you see, this candle value, the green one, oh, it's not precise, it should be like that. First candle value, here we go. What this market did over here, oh, slightly. It nearly hit the level of 4. At the 5 it found a resistance and then went through. At 8 it found resistance, 8 octave. So it's do, re, mi, fa, sol, la, si, do. So this is the area of support and resistance. let's try it once again from here. Boom. So we got the level. It's not that precise. We have to move it slightly higher. First hit over here. And let's see what's happening here. It's happening that the market shows regularity again. Oh, well, probably we should get considering this one as a first level. And we are on daily Euro USD. Look how market behaves over here. After market tripled this level over here, it hit once, it hit second time, came back, and then with one strong move the market went through. Let's try another one. We are on gold. Let's try this gold. Let's get rid of this one. And let's have a butcher's once again. What's happening here? Is it gold? Yes, it is. It is gold. Gold is coming back at the moment from this top, which was high was 1765.3. So it's not all-time high, but it's recent high since 2008, 2009. When was that? Let's try it on gold. When you try it on gold first leg, like this one, let's try it. Boom, we've got on gold first leg, and we got the levels where it stops. You see, that's the level. That's the area of strong resistance. You see, market went through, but came back quickly. So that's the resistance. Here we got support on line number 2. Here we got resistance. It went through, became support, supporting the price. 2 levels higher on number 5. See, over here is 5. Found again resistance. It should go up to the number 10 as far as I remember. Would it? Number 8. It hit the octave, came back. It was support. Very easy, guys. Look, at 10 exactly. It hit 10, the level 10 over here. Starting, remember, we started our measurement in August 2019. And this price was 28th of August. And what happened? Market went through after 2.5 years. It hit exactly 10 times the first leg and came back very quickly. And it took a month and something to get through. And again, the market hit the level 11. Next level, you are guessing. It's 1811. That's the next level for gold. And at the moment we are at this support. This support 1702. The next support is 1648. So the market or stays here and came back and go to 1812, or came back here and stop at this support next level. That's it from me today, guys. I hope it helped somehow. And if you want to draw some rectangles on your areas of support and resistance, it might help you in the future as well. So if it helped, just leave me in the comment and info, and we'll see how it works. So thanks very much for your time once again. Bye bye.